Alrighty, welcome back, everybody. Happy Thursday. Wanted to make this video a little bit earlier than last night so I can show you, what I did initially today. So first off, just wanted to get that out of the way. If some of y'all, don't believe me that I traded yesterday, just because the executions disappeared after the new day was created, then just want to get this out of the way right now. I have all the drawings off for right now. If I put them back on, there they are. But just wanted to, I'll break down everything throughout the trading day and stuff like that. And I'll go through, the regular market recap stuff. But this was the trade today. It was an afternoon trade, and I'll explain the logic and the reason why I took that trade today. So let me go ahead and take these off right now just to clean everything up. And let's go back up to the daily right now. Let's look at what we got. Obviously, this candle is still being formed. So the day is not over with. We still got 44 minutes left. But as we can tell again, this thing has dove deeper into this fair value gap and also into this fair value gap right here. So I don't have that marked here yet, but let me just do this and take these back off for right now. Okay, so before we had all of this price action today, we go down to a lower time frame. Let's go to the 4-hour. Let's use bar replay like we usually do, and let's look at prior to 9 o'clock or 9:30 opening bell, I should say. So right here on the 4-hour, I know this is the 6 a.m. candle. The next one is 10 a.m. So this would be forming during the opening range. But if you let me see if I can go down to the 1-hour then. Yeah, 9 o'clock right here. Or let's go one more. Let's do 8 o'clock. So 8 o'clock, this is what you would be seeing, or this is where, price would be at, right there before, market open. So we have this run up, and this run up was from 6 p.m. to 11 p.m. and then we start to see it fall. Now, as soon as it broke below this low right here, I was pretty confident that we were going to drive deeper into that fair value gap. I wasn't expecting it to go as deep into the second fair value gap, but my bias was pretty much bearish going into today. But when we see this and price is right here and it's 8 a.m. and our bias is bearish, what are we thinking? Are we thinking, okay, if this thing stays where it's at right there and it opens up at the, near the price that, it's at trading at right now, that we can take a long, right? I mean, we can take a short, right? And we can enter. No, we can't. Now, was there a setup? Yes. Did it pan out? Yes. Was I confident that, in taking that trade? No. So that's the reason why I didn't take it in the morning. And truth be told, I did record a live stream video, but it wasn't, first of all, it wasn't very good. I didn't like the way that I explained a bunch of things, and I made a bunch of mistakes. So I didn't want to post it. Plus, I didn't take a trade in the morning session, so I didn't feel like, it would be worthwhile to post that video. So that's why I'm making this one, and I feel like this is going to be, better off. Anyway, so right here, what am I thinking? Where's the most energetic price run down, since my bias is bearish, from this early morning, yesterday, whatever? If you notice this right here, we have a swing high, and we don't technically have a swing low yet, but we can still measure this to get levels of equilibrium. And remember about the rules. To enter going short, you have to be in a premium. To enter going long, you have to be in a discount. And I was wanting to go short, so what did I have to wait for? I had to wait for it to come up into some type of discount. So dropping down to the 15 minute, this is not 8:45. Let's get all the way to market open. Right here, excuse me. Oh, apologies. I muted the microphone, but I just sneezed, so apologies, folks. Anyways, not yet. Right there, 9:30 slams down. Was I looking to take a short if it immediately went down? No, because why? Because from here all the way down to here, we are still in a discount. So I can't enter technically just yet. Retraces a little bit. Does it come up into a discount? Because equilibrium from here down to here is probably somewhere around here. Can we enter into a short yet? No, we can't. We have to wait for it to get somewhere in this area. Okay, we're getting better. But is it in a premium yet? Has it come into a premium or any type of, PD array in a premium? No, it has not yet. But where did this go? And I'll put the drawings back on right now. From Jump Street, it went straight down and went outside of the first daily fair value gap, because I'll put that right here, the first daily fair value gap, and tapped down into the second daily fair value gap. 15 minutes. Here. So boom, hits it right there. But does it go below it or anything like that? No. Let's see about the midpoint. It does go down below the midpoint, but does it stay down there or go, any lower than that? No. And if you look at the 1 minute, we can clearly see this thing has a tough time getting below the midpoint of that daily fair value gap. So whenever we see that, we can reasonably expect some sort of retracement up. Now, could I have taken a long? Yes. Was I wanting to take this high, low, high, lower, low breaker? Yes, I was. But you will see later on this breaker is used again. Doesn't come down into the breaker. This technically is not a fair value gap because of this wick, but because this is a wick, we treat these as gaps too. Below equilibrium is right here, but it doesn't get down into it. So I can't, or I don't get in the market, and it does exactly what I expect it to do. And let's go back up to the 15-minute time frame and let's measure equilibrium real quick. So let's use the fib. So from that high to this low, equilibrium is right here. Now, I really like this fair value gap because it's above equilibrium in a premium, and we have the midpoint of the opening range gap right here, which has a 70% chance of being hit within the day. Typically, it's within the first 30 minutes, but if it doesn't, it'll, 70% of the time it'll happen throughout the day. So I like this area up here. So that's where I would. That's where I was watching. So let's go back down to the 1 minute. Like I said, I could have taken this long and and rode it up to equilibrium. I would have taken something off at equilibrium when it hit there, and aimed for that 15-minute fair value gap, which I will go ahead and mark for y'all. This is the first presented fair value gap, and as you can tell, it did not get filled initially. So what is price going to want to do? Return back up into it, comes down again, fails at the midpoint of the daily fair value gap, retraces higher. This is a great setup. This would have been a great setup if it came down into that breaker, but never did. So you can't get mad at it and you can't chase it. Anyway, so we are getting a little, we're at 1018 and it's gone. And so I'm like, I'm not going to be able to get a trade unless it comes down into a discount. I'm looking at the 5 minute. I'm like, okay, we have a low, high, lower, low. It's closed above here. If it gets back down here, we can, look at taking a long. But we also have this breaker right here, so I don't want to see it come below there. But I'm too close to this 15-minute fair value gap, so I really don't want to take a trade right there for it because it's not really worth it. So I'm like, you know what? The morning session, it's pretty much a wash. So I pretty much just walk away from my charts and I go do some other stuff, but I'm still watching price. And as you can tell, it comes into that 15-minute fair value gap. What time are we at? 10:50. Okay. And so I'm thinking, it's too late for it to, want to turn over and, seek some sort of sell side, right now, just because it's moved so much from overnight and the morning and retraced higher that I'm like, okay, let's just wait till the afternoon. And see here, right? Oh, see right there, it didn't happen just yet. Look at this thing just consolidating. Now, it does get above it, but if we look at right here, we have an hourly fair value gap. So we'll go ahead and we'll extend that down there. Now, does it color out outside the lines a little? Yes, it does. But I was not wanting to take a trade during that time, so I was just monitoring price. And as we can see, slams back down. So this is permissible, in my opinion, if this has this type of reaction down here. Let's go back to the 5 minute. So all this time during lunch, it is slowly making its way back down. And right there, when this candle closes, what time are we at? We're at 1:20, right before the opening of PM session. And right here, I see this high, low, higher high, breaker. So I'm monitoring to see if this breaker can, keep price at bay and then send it lower into somewhere down here. Because what do we have here on the 5 minute? We have a bullish order block. And if we go down to the 1 minute, we have the start of the order block on the 1 minute, and we also have this on the breaker that was not used for the morning session. Now, granted, I didn't have this labeled on my chart, so you'll see why the trade got cut off, or I closed it out sooner when I could have held for this, but completely satisfied with this also. But right here is where I'm monitoring price. So it's below the 5 minute breaker. I'm expecting it to draw up into it and see if it rejects it. So let's see if it happens. So yep, draws up into the breaker. Right here is 1:30. So keep that in mind that this is the start of PM session. Boom, start a PM session. Sweeps this high. Starts to get a little, starts to, fall just a little bit, fall out of bed. Boom. Now remember the rules that I had for higher time frame confluences. If you are looking to take a trade off of a higher time frame confluence, but you're on a lower time frame and you're executing on a lower time frame, you have to wait for some type of confluence that you like. And my rule is a fair value gap that is 100% completely outside. Like every single candle within that pattern, which is a 3 candlestick pattern, has to be outside of the higher time frame PD array. So it has to be completely outside of this breaker. So that's essentially what I'm waiting for right here. Boom. right there. I like that displacement right there, and I'm waiting for this candle or the next candle to form, have it form a fair value gap, and it does right there. We have a very small fair value gap, but still we do. Is it completely outside the breaker? Is this candle touching the breaker? No, it is not, and I know it's correct because I have the magnet on, and that is to the tick of where this breaker starts. So that gave me confidence that this is a valid setup. So what did I do? I put my limit order right there at the start of the fair value gap and right at the start of this bearish order block. Also, this is the balanced price range, so it shouldn't have the need to come up any further than this swing high, which is why I put my stop right above that swing high. Comes up into it. Now it does overshoot it a little bit, and it comes up into the 930 opening price, which I allow for it. And just like we saw on the 1 hour, with it coloring outside the lines a little, it's completely permissible. Now, did it scare me a little bit? Yeah, but I wasn't risking a lot, folks. I think I bought 5 contracts, and 5 contracts with this amount of risk was like $150 something, but the potential was like, if I would have held for the full thing, it was like $600. Now, did I get the full thing? No, I didn't, because I took partials along the way. And do I care? No, I don't care that I didn't get $600, because at the end of the day, my trade idea was correct, and that's all that I care about, and I made money from it. That's, the main thing at the end of the day. So I'm in the market. My stop, don't call me, sorry. So my stop is above this swing high. I think the next candle goes up just a little bit. Yeah. See, it gets pretty close there, folks. It really does. But does it stop me out? No, it doesn't. And do the bodies, for the most part, respect this fair value gap? It does. It colors outside the lines a little bit. The wicks try to scare you, but the narrative is that this thing is going lower. How much lower can it go? Well, we do have the first presented fair value gap right here, so I'm thinking that could be an easy target for me to hit if it doesn't have to come all the way down here. We also have this start of the order block right there, and we have this breaker down here, which I did not see, that I could have potentially held for. But anyways, let's keep going. So right there, I'm liking what I see from price, and I actually do, but it doesn't give me the opportunity because I have a limit order right at the top of this first presented fair value gap. But I put a limit order to add to my position right there. I wanted to sell, I think, 2 more contracts because after this happened, I rolled my stop down to here, and like I said, had a limit order for 2 more contracts of the 5 that I currently had on to add to it. But as you can tell by the next candle right there, it tripped my first limit order, and so I just canceled that addition of it because I wasn't going to add more to it after I took a partial. So right here, I didn't move my stop to all the way to break even. I moved it just below or just above this candle's high because this is a bearish order block, and it shouldn't come up any higher than that. Because I was expecting it to maybe come back up into this fair value gap, but not go above this candle's high. It doesn't even get to my entry though, I'm pretty sure. So right here, I'm thinking, okay, it hit the first presented fair value gap, and it could possibly, retrace higher. So if it gets below here, I want to take another partial. So I wait, and boom, I take another partial right there. I think I take 2 partials. I think I take 1 right there, and I take another one as it's driving just a little bit deeper. And right there, I took 2 contracts off when it hit the first presented fair value gap, so I got 3 contracts on. Took 2 more off when it went below this low, and now my stop is rolled to break even, and now I'm just holding for it down here. If it gets down to it, great. If not, I've bagged, a good majority, like basically 95% of my contract size. So right here, we're just watching, making sure everything is still showing bearishness. So we have this. I'm going to take this off for right now, folks. We have these 2 candles, which is a bearish order block. price should stay below here. We do have these equal level highs right here, which I was a little bit concerned about, so I didn't know if it was going to get down to my limit order or not. But at the end of the day, it comes down below this candle, so this becomes a bearish order block again. I think I rolled my stop down to here now because it shouldn't come back up above this candle before, coming down here. And right there is where we have full take profit. Comes back down into the second daily fair value gap and cascades lower into where I should have had my target at, which is this bullish breaker. And hits the breaker, stays inside the breaker, and causes a reversal, which was a nice trade if that you had a model like that. I don't have a model that, this would be too, scary for me to take a trade directly from this breaker. So anyways, that is, and as you can see, it just keeps, climbing a little bit higher, and then it hovers around equilibrium for, the whole session and whole day. So that was today's trading market recap, trade recap, whatever you want to call it. I'll put this back on for right now. Stop right there, targeted that. Right there. And let's do that. And let's put these back on, and then we will call it a day. What's going on? Again, why did it go to paper trading? I don't know why it always does this. I don't like it when it does this. So there are the executions right there. Selling 5 initially right there, as you can see. I'm going to take this off right now, folks. It's a 4.13 R. So selling 5 right there. Look at that carrot right there. That's where I sold because I had my limit order right there. Stop was above here. And then bought back 2 right there as I hit that. The top of the fair value, the first presented fair value gap right there. Bought 2 more, or bought 1 more as it was going below this low, and bought another at what, 24,538. So no, so I bought 1 again as it hit the first presented fair value gap, and then I bought another as it was going below this low. So yeah, that's what it was. So there's 2 more off, so I have 1 contract left on, waiting for it to come down and to hit that order block. As you can tell by that line right there, had the limit order right there, and there's the business. There's the full take profit. So with that, tomorrow is Friday. Forgot to mention. So account summary, today's P&L was $323. The risk was, I think, like I said, $170. The full total profit, take profit, was like $600 if I would have held for it. I didn't hold for the whole thing because, I'm smart and I want to be profitable. So took partials along the way, got 323, which is basically half of it. And, based on the risk margin, that's a good trade. That's a good trade in my opinion. So after today, the balance of the account is $102,596.60. I think today is marks the first full week of trading, which is, I say full week of trading, but it's 7 days of 7 active trading days. So I've unlocked being able to request payouts. I don't know, I have no plan on, when I'm going to take a payout. I don't know. Not focused on that, just focused on staying consistent. But the total P&L over 7 trading days has been a little over 2.5K, which is a little more than 2.5% of the full account balance. But compared to what I'm risking, I'm typically risking between $100 and $300 per trade. So you do the math. That's pretty good in my opinion. I'm not, trying to gloat or boast or anything like that, but I'm trying to show my audience and, others that you don't need a lot of risk to make good money with all of this. And if you, me, or anybody has access to their own capital of, say $100,000, then you can, like I said, depending on, your skill level, your win rate, your, conviction again, and like I said, it all depends on your own trading style. But you can, and I don't recommend going over, and I don't recommend anything over 2.5% for, myself personally. But for people that have experience and, are looking to really make some serious money, I mean, you can do that really, really easy within these markets. You have to be smart, you have to be patient, and you have to be conservative. But it's amazing the compound effect of this because, I mean, that's a $300 trade. But you do that 4 times in 1 week. 1 week, you do that 4 times. That's over $1,200 per week. Now, a lot of people say, yeah, $1,200 per week times 4, that's like $5,000. That's, like $5,000 a month and stuff like that. That's not too much. But, dude, if you're doing this on top of, your regular job, or you're a student and you're doing this, or I mean, you're just doing this as a side hustle and trying to make some extra cash, man, that's for how long did that take? From time of entry, 6 minutes to hit first take profit, 7, 8, 9, 10, 11, 12 to hit second take profit, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 20, 23 minutes. 23 minutes essentially to make $300, and like I said, you do that 3 or 4 times within a week. That's the easiest $1,200 or the fastest $1,200 that you'll ever make, folks. So, like I said, tomorrow is Friday. Remember what I said about Fridays, so we're gonna be smart tomorrow. I'll do, my analysis going into the trading day tomorrow. I'll record another live stream video like I did this morning. And if we get more action, if I'm able to take a trade and I do execute, then I'll post that video. If not, then I'll just do my regular thing. And if I take a trade, I will do a market recap. And if I do nothing, then I might not post a video, to be completely honest with you. I've been pretty consistent, so far at least, with posting, daily, regularly. I'm also, if you've noticed, posting on in a separate playlist called Mother Funded Boot Camp, and so I'm kind of I recorded those videos I think a while ago, and I'm just starting to put them out there. They're more educational. They go over the PD arrays and the confluences that I like to use. I'll build more into that series as well as time goes on because obviously I'm going to run out of the material that I recorded already, and so when I do. You can always comment to give me suggestions on topic ideas because I'm here for y'all, and whatever you want help with, I'm more than happy to help if I know what it is. Like obviously I have to know what it is, so it has to be some type of smart money concept based. But like I said, if you want me to make a video about something specific, please let me know, and like I said, give me a heads up on what y'all would like to see material-wise. But if you want to check out that, that's in that playlist, like I said, labeled Mother Funded Boot Camp. So today was pretty good. Like I said, just it doesn't matter if it's a morning or an afternoon trade. The logic still has to be there no matter what. And this is what made sense to me. Taking a trade or taking a short down here right now or right there didn't make sense to me. Taking a long did, and I was, but it never got down here. But taking a short did not. So I had to wait, till it got up into a premium, then came back down, came into this breaker outside of it, fair value gap, and I already went through all of that. But anyways, today, September 25th, tomorrow, September 26th. And so hopefully we'll see y'all very soon whenever that next video is. Be safe.